gold and silver, two timeless metals that have protected wealth for thousands of years. But as 2025 unfolds, investors are asking one burning question: which metal will outperform in the months ahead, gold or silver? We've seen gold hit record highs this year, while silver seems to be quietly preparing for something big. Analysts, economists, and even Robert Kiyosaki are making bold predictions that silver could finally outshine gold. In today's video, we'll compare gold and silver head-to-head, look at the economic trends, supply and demand, industrial use, and the investment outlook for late 2025 to find out which one truly has the upper hand. Stay with me till the end, because the answer might surprise you. Over the last 2 years, global markets have been on edge. Inflation has remained stubborn, central banks are buying record amounts of gold, and geopolitical tensions are reshaping trade and currency systems. In times like these, investors turn to hard assets, things that hold real value when paper money loses trust. Gold and silver are both traditional safe havens, but they play different roles. Gold is seen as pure money, a universal store of value. Silver is money and industry combined, used not just for wealth protection, but also in manufacturing, technology, and green energy. And that's where the story gets interesting. Let's start with gold. As of mid-2025, gold has been trading at record highs, hovering around $2,400, $2,600 per ounce, depending on the market. Why? Because global uncertainty has never been higher. Central banks, especially from countries like China, Russia, and India, have been buying gold aggressively to reduce dependence on the US dollar. Meanwhile, inflation in major economies hasn't gone away. Even though interest rates have stabilized, people are realizing that fiat currencies are losing purchasing power over time. So gold has done its job. It's preserved value. However, gold's upside potential from here may be limited. It's already near all-time highs, and the next big move would require either a major geopolitical event or a global financial meltdown. That doesn't mean it's LL fall, it just means gold might move slow and steady, not explosively. Now, let us talk about silver, the underdog metal that has been quietly building momentum. Silver's price in early 2025 has been fluctuating between $30 to $35 per ounce. But experts believe it could break $50 or even $70 if industrial demand continues rising. Here's why. Silver isn't just a precious metal, it's an industrial powerhouse. It's essential for solar panels, electric vehicles, semiconductors and batteries, medical devices, and AI-driven electronics as the world transitions to renewable energy and smart technology. Silver's demand is soaring. In fact, the solar industry alone consumes nearly 15 to 20% of global silver supply, and that number keeps growing every year. At the same time, mining production is falling. Major silver-producing nations like Mexico, Peru, and China have reported declines in output. While no major new silver mines are coming online soon, this means we're facing a potential silver shortage at the exact time when demand is exploding. That's what has investors excited. Let's put gold and silver side by side. Factor gold, silver, primary use, store of value, industrial plus store of value. Supply trend stable, declining industrial demand, minimal exploding price. Volatility, low high accessibility, expensive affordable golds, total supply increases gradually every year. It's mined steadily, and central banks control large reserves that act as a stabilizer. Silver, on the other hand, is mostly mined as a byproduct of other metals like copper and zinc, which means you can easily increase production even if prices rise. So when industrial demand surges, silver supply can't immediately respond, leading to massive price spikes. That's why, historically, silver's rallies are faster and sharper than gold's. For example, in 2011, silver jumped nearly 150% in less than a year, while gold rose only around 25%. Here's one of the most powerful metrics investors use. The silver to gold ratio, how many ounces of silver it takes to buy 1 ounce of gold. Historically, that ratio averaged around 15:1 to 20:1 for centuries. Right now, in 2025, it's hovering around 80:1, meaning silver is extremely undervalued compared to gold. If silver were to simply revert to a 40:1 ratio at current gold prices, it would mean silver should be trading at $60 per ounce or more. That's nearly double the current level, and that's exactly what silver bulls, including Kiyosaki, are predicting for late 2025. Now, it's important to be fair. Gold still holds a unique psychological and financial advantage. When fear hits markets, whether it's war, banking crises, or currency collapse, gold is the first metal people rush to. It's recognized everywhere, accepted by central banks, and deeply ingrained in cultural value systems from India to the Middle East. Silver doesn't enjoy that same level of universal trust. So, in times of extreme panic, gold usually outperforms. But when recovery or industrial growth kicks in, silver often takes the lead. That's why many investors hold both. Let's look ahead. By late 2025, analysts expect a weaker US dollar, persistent inflation, and growing demand for metals tied to clean energy and technology. If global central banks continue their gold buying spree, gold could stay above $2,500 Oz and possibly touch $2,800 under favorable conditions. Silver, however, could outperform percentage-wise if silver even touches $60 Oz. That's a 70 to 100% return compared to gold's possible 10 to 15% upside. Add to that, if industrial shortages become more visible by Q for 2025, silver's move could be explosive. So, while both metals may rise, silver could deliver the bigger gains. If you're planning to invest, here's how to play it smart. You can invest in physical metals, coins, or bars. ETFs like SPD are gold shares, GLD or iShares. Silver Trust SLV mining stocks, high risk but potentially high reward, silver-focused mutual funds or commodity funds. Experts recommend keeping 5 to 10% of your portfolio in precious metals. And if you want growth potential, lean slightly towards silver in 2025. But remember, both are long-term stores of value, not quick trades, so gold or silver. If you want stability, security, and preservation of wealth, gold is still king. But if you're looking for growth, opportunity, and upside potential, silver might just be the prince ready to take the throne. As 2025 draws to a close, the precious metals battle is heating up, and the smart investors are watching both sides carefully. What do you think? Will gold remain the champion, or will silver finally steal the crown? Drop your thoughts in the comments, and don't forget to like, subscribe, and hit the bell icon for more in-depth market insights. Gold preserves wealth, silver multiplies it.